But a fascinating subset to this story right now is that China so far isn't doing anything to rescue Evergrande. And if this strikes you as a bit of a pattern here, you're not imagining it. Lately, it's gone after some of its biggest success stories and really, run roughshod over them, even penalizing those that have tried to list in this country and other countries their offerings, even if it means, and it has been oftentimes a big shock to the system, and even if it means in this particular case that the value of real estate, which has tumbled in China, and now some of these bonds are trading at, 25 cents on the dollar, and it could go still lower. China's an investor in that as well, remember? So China takes it on the chin. So to Gordon Chang, the China analyst extraordinaire, the great U.S.-China tech war, among others, Gordon, they're willing to absorb a lot of financial punishment to make a statement here. But I can't figure out what the statement is.
Yeah, this is really a puzzle, as you point out. The Chinese technocrats want to deflate the bubble in the property sector, which accounts for between 26 and 29% or so of China's total GDP. And Evergrande is the poster child. It has debt equal to about 3% of the country's total gross domestic product. So you can imagine how important this is. This is $305 billion. So they need to do something to rein this in. But this could get out of control for them, and that really is the big worry. And that's why investors in the U.S., yesterday saw this and said, oh, my God. But they should have seen this a long time ago, Neil, because this situation has been around for quite some time, and it's been evident to watchers.
You know what's weird about maybe the whole, if you think about, and you know far more than I, obviously, the Chinese system, which has capitalism, communism sort of living side by side, but it will default to its more brutish instincts, I think, and when it comes to total government control, and even going after those entities and individuals in China who've had great success under that system, as if to say, you've gotten too big for your britches, and we're going to slap you around, even if we're slapping ourselves as well. What do you make of that?
Yeah, I mean, what I make of it is a decline of $3 trillion in market capitalization for Chinese companies since about the first week of November. And it's not just Ant Group and Alibaba and Tencent. They're going across their most productive companies across the board. And that really means that at a time when China needs outside money because the debt crisis in China is just out of control, foreigners are not going to want to put their money into a country that could implode, as Charlie was just talking about. So for Xi Jinping right now, he's got an economy which is not producing very much, if it's producing at all. He's got foreigners running for cover, and he's got a debt crisis that he's got to deal with. And this could very well be the biggest debt crisis in history.
Wow. Gordon, thanks. Very good catching up with you, my friend. Gordon Chang, All Things China. He is the man on this stuff.